In today's video, we'll be discussing about the 3 best stocks that you can buy right now in May 2023 if you're looking for great high growth and dividend stocks that might be able to outperform the market for the rest of the year. So I'll share with you 3 stocks that at these levels might be very interesting for you to put on your watch list. But keep in mind that May is often considered as the beginning of the summer period on the stock market.
Yeah, baby!
Which is often considered as a slow period on the market where the gains are quite rare to find.
It's a trap!
Without losing too much time, let's get to it right now. When we talk about summer, one of the first things that comes to mind is the big vacations, but also the big cruises in the south. So one of the great companies that could be very interesting for you to put on your watch list in May 2023 is the Royal Caribbean Cruises Company with the ticker RCL. This business is actually the world's second largest cruise line operator with a market of over $10 billion. This company is offering a wide variety of cruises on some of the biggest boats in the world, including the Harmony, the Allure, the Symphony, and the Oasis of the Seas. In addition to offering a lot of great and interesting features on every single one of their boats, such as great restaurants, some shopping centers, and also a lot of great water slides, they are also offering the possibility to their travelers to visit over 300 of the hottest locations all around the world. As you can see, it is the perfect recipe for some great vacations with the kids or also with your friends, especially if you want to enjoy the benefits of being on a paradise on the sea while also having the possibility to travel all around the world. And for some of their trips, they are starting as cheap as $200 per person. But now, with an investor point of view, this could be a super interesting company to invest in right now, knowing the fact that the vacations are about to begin. And so this could have a great impact on their earnings report on the 4th May, where we can see a massive increase in their total revenue, because as you probably know, the pandemic and the travel ban itself have massively impacted this company's financial results. And it is why we can see that they've lost a lot of their total revenue throughout the period of 2020, 2021, and since 2022, they are coming back and they are growing their revenue. Nevertheless, even if this company is super interesting to keep on your watch list, keep in mind that it is super volatile as well, with a beta of over 2. And with their current debt versus cash position, you can see that it is a company that is massively depending on the fluctuation of the interest rate. But now, for my second pick, I've decided to present to you a company that has been on the opposite momentum during the pandemic, where it has gained a lot of momentum. And it is why I've decided to present to you the electric vehicles giant Tesla with the ticker TSLA. I think that this company needs no introduction, but if some of you were living under a rock over the last 10 years, well, Elon Musk companies is actually the largest electric vehicle companies in the world with a market cap of over $400 billion. This obviously means that the biggest part of the revenue from Tesla is coming from the sale of their different cars, such as the Tesla Model 3, the Tesla Model X, and the Tesla Model S. Over the 4th quarter of 2022, they've been able to produce over 439,000 cars, which represent an increase of about 20% compared to the same quarter, but in 2021. But this isn't the only product that Tesla are selling, because they are also selling different energy products. In fact, in their energy branch, they are producing a super interesting product that is called the Powerwall. This basically represents a battery that stores energy, but that also detects outage and automatically becomes the home's energy source when the grid goes down. And so Tesla's energy revenue has soared to $1.53 billion, which represents an increase of close to 150% compared to the same period last year. Nevertheless, over the last couple of weeks, this company has lost a little bit of its value, notably because of the earnings performance, where they've notably been able to beat the earnings per share prediction, but unfortunately they have slightly missed the revenues prediction. However, this doesn't really represent the true picture for the total revenue of this company that has been growing of about 24% compared to the same period last year. And despite the drop of about 20% in their total net income, which was mainly due to the underutilization of their new factories, combined with higher raw materials, commodity, but also logistic costs, well, despite all of this, Tesla is still one of the most traded and one of the favorite stocks for the investors since the last 3 years. And so it means that this company could continue to see some massive growth over the next couple of years. While right now they are trying to expand the scope of their operations, notably by building new gigafactories in Mexico and in Austin. And with all the current factories all around the world, this company has been able to establish themselves as a leader in the electric vehicle market over the last couple of years. And so now let's make an hypothesis that this company will become the number one in the future and over the next 5 years in terms of valuation, with a market cap of about $2 trillion. Well, it means that your current investment in Tesla could gain over 400% of gain throughout that period. But once again, by investing in Tesla, keep in mind that you are investing in a super volatile stock which has a beta of over 2, meaning that even if this company is currently a giant in its field, it could gain a lot of value in a short period of time, as it could lose a lot of value in that same period of time. And this is also reflected in their high price to earnings ratio of about 40 at the moment. However, if you're looking for a more stable company that is giving a lot of dividend income to their shareholders, well, you could find a lot of joy and fulfillment by investing in Realty Income with the ticker O. This real estate investment trust, which is currently in the top 10 of the largest REITs of its kind, is actually giving a 5% dividends to their shareholders. And on their side, they are basically buying, operating, and managing single-tenant commercial properties all around the US, the United Kingdom, and Spain. It is why O is considered as a retail REIT, which has over 76% of their total operations in retail businesses, notably with clients such as Home Depot, Dollar General, and Walmart. It is why they currently own over 12,000 different real estate properties in over 84 different separate industries. So on your side, instead of buying real estate properties one by one, you could simply buy this ticker. And at the same time, you could avoid all the big problems that comes with real estate, for example, the problematic tenants, but also the toilet that will leak at midnight. On their side, these real estate investment trusts must distribute over 90% of their total taxable income to their shareholders in the form of dividends. So it is why on your side, you can receive a lot of high dividends and a lot of passive income from those options. This is the kind of stock that you could buy and forget, and in 30 years, when you'll be close to retirement, you can simply enjoy the massive dividends that comes with it. Plus, lately, they've obviously lost a little bit of their value, notably because of the rise of the interest rates, which has had a bad impact on the total value of real estate. Nevertheless, with a beta of less than 1, it is a far safer option compared to the 2 other picks on my list. And I almost forget to mention, but this company is giving some monthly dividends to their shareholders, with the only problem that could be that they have some super high dividend payout ratio of over 200%, meaning that the dividends on the long term might not be that much sustainable, which means obviously that they might get cut. But despite that, with the great diversity that they currently have in their real estate portfolio, I believe that it is one of the best REITs that you can buy on the market at the moment. So as you've been able to see, there are plenty of great companies that are on discount at the moment on the market. But on your side, if you're looking for the best ETFs that you could buy right now and hold forever, well, check out the video that's gonna be right over here, and I will see you soon. Peace!